So Tom, welcome to Korea. So I know this is a very brief trip. So you're not going to Tokyo. So tomorrow you're just flying back to New York City.
Well, tonight I'm flying back.
Tonight, okay. But really, on behalf of Samporo, really appreciate your time and efforts to make a trip to Korea. So we're gonna go one by one. The questionnaires that were, prepared by our nice audience here. So when we met last December, I remember your argument was that the market looks still pretty solid, but you expect a major correction sometime in the middle of the year. I think that correction came a bit earlier thanks to Donald Trump. And I think you were bullish on small mid caps and the Bitcoins. But we have a lot of geopolitical risk, so the valuation don't seem too cheap. But what's your overall assessment of the market, where we are, and how do you anticipate the market in the second half and 2026?
Well, the stock market in 2025 faced a black swan because Tariff Liberation Day was a shock, and it created a downward spiral in stocks, falling 20% in the fastest pace, or one of the fastest pace in 100 years. There have only been 12 times in history that stocks fell a similar amount and a similar speed. And I think the mistake many people made was that shock turned people bearish. As you mentioned, we did think there would be a correction this year, but the reason I think we didn't turn bearish, even though this was a huge decline, is three things. One, we didn't expect President Trump to stick with the tariff terms. So even though in the beginning they claimed this was the deal and everyone had to take it, we thought they would eventually walk back those terms, which is what's happened. And in fact, what we've seen so far is the tariffs are much, much milder than many people thought at the start of the year. So we're actually in a better place. The second is many economists convinced you that there'd be a recession. Do you remember all these economists said a recession's guaranteed, and that's why everybody panicked and sold their stocks. But we don't necessarily listen to economists. We prefer to watch what the high yield market is doing. And the high yield market, while it showed some turbulence, actually moved in a way that said there might be a growth scare. So there's a difference between a growth scare and a recession. A growth scare just means everybody gets cautious, which is understandable. And the third reason we didn't turn bearish is that waterfall declines, like we saw, usually come back as a V-shaped recovery. And that was our argument, that this would be a V-shaped bounce. And in fact, we were pretty convinced of it because the VIX, which is a measure of volatility, jumped to 60. And if you look at the last 35 years, anytime the VIX has moved above 60, no matter what you think, you have to buy the stock market because that's pure terror. The market is so scared, they're not pricing anything, and that's why you have to buy that. And so stocks had a V-shaped bounce. And now that we're almost back to the old highs, I'm finding a lot of people are still bearish. Maybe in the audience, you guys are still bearish, thinking, I don't see why stocks came back, so I don't really want to buy the stock market now. But here's something to keep in mind. In 2025, we've already had a 20% decline. The chances of a 10% decline between now and year end is very low. It might even be statistically 0%. So maybe the stock market could trade sideways for a little bit, but the chances of us declining again are very low.
I remember when I was an analyst at JP Morgan in the 90s, I always had to revise my earnings forecast because one of my colleagues, Asian economist, she was always consistently wrong. So we should not believe in the forecast by the economists. So you remain quite positive, right? So let's just talk a little bit about the interest rate monetary policy. If and when the Fed cuts the benchmark rates in the second half of the year or next year, do you think that the strength in the small mid caps will continue? And how about some of the sectors which would drive the market? Do you think that the Magnificent Seven, M7, would lead the market? It has been relatively underperforming the market, I think, year to date. And which sector, which companies would be take the leadership in the overall market?
The Fed is not cutting rates right now. And Fed Chair Powell said he's not cutting interest rates because he's expecting inflation to rise over the summer because of tariffs. That might kind of make sense. I mean, I'd say if someone said that to me, I'd say I understand that prices should be going up because of tariffs. But that is not actually how monetary policy should be administered. The Fed is really supposed to overlook supply shocks. So if you have a supply shock, like a tax, and it causes a one-time rise in price, the central bank is not supposed to adjust monetary policy for that, because the Fed is trying to control demand. Meaning, if there's so much demand for something that it causes prices to go up, they try to tighten monetary policy. But because of tariffs is more like a supply shock, the Fed should actually look through it. The bond market is starting to make that conclusion. On Wednesday's FOMC meeting, the bond market disagreed with the Fed. Interest rates actually went down in the last couple of days because they don't believe the Fed should be on hold. And that's also been our argument, that the Fed, if they're not cutting now, they have to do more cuts next year. Maybe more importantly, most people think stock rallies are only because the Fed is easing, adding liquidity. That's why in the April lows, people were saying the stock market couldn't rebound because the Fed wasn't going to add liquidity. But guess what? We had a V-shaped bounce anyways. And so it shows you the central bank isn't needed for stocks to rally, but next year we think they're going to cut a lot, and that should support stocks. And as far as positioning goes, I don't think you really explained our view on sectors this year. At the start of this year, our top calls were industrials, financials, and tech. That was first, second, and third. Year to date, industrials, financials are outperforming the market. And tech is actually beginning to outperform. So that's really been our stance this year. But with the Fed cutting rates next year, I think that's going to be good for interest sensitive. So that should really support financials, and it should support small and mid caps.
Your call early this year was industrial, financial, tech, and now tech is finally picking up. And you continue to believe that cyclicals will do very well as the tech, in the environment that would be more inducive by the monetary policy. Let's move on to stock. I think in this audience, we have quite a lot of people who have been holding on to Tesla. I think one of the lady here, she has been owning the stock for 11 years, and Tesla, I think there's a lot of upside, but also has a lot of volatility, and that reflects the risk. So if we look at the risk reward of Tesla, what is your assessment of the stock, particularly given that a lot of the locals here are interested in your view? I know you don't talk about specific stocks, but do you have any view? Yeah.
Can I see, can you raise your hand if you own Tesla? Got it.
So majority?
Yeah. Well, I think Tesla is one of the most important stocks in the market. Because not only because of what Tesla does. Remember, Tesla is making electric cars, and they have a huge advantage. I mean, they completely changed the automotive industry, not just because they made batteries better. It's also because they've They have expertise in manufacturing. Now, manufacturing for cars is one of the hardest things to do because of the supply chain. So if they can dominate manufacturing of autos, Tesla will dominate whatever industry requires manufacturing in the future. Okay, that's the way you should think of it, that they have intellectual property that allows them to produce anything that the world makes at a lower cost. Like, for instance, if they decide to make smartphones, I would assume they could actually be one of the most efficient producers of that. They have a huge lead in AI now because of Twitter and their XAI. And with full self-driving, it is strengthening the capabilities of their artificial intelligence. They might even integrate Grok into that. And now they have Optimus Prime and robots. And they are, by a country mile, leading in the US in terms of robots. There was companies like Boston Dynamics that was working on these things a lot earlier, and Tesla has already surpassed them. So if you ask me, Tesla represents a company that knows how to take technology and then turn it into real world products. But they're now at the intersection of everything that's important, because Tesla is linked to Starlink and to space and to Neuralink and to the Boring Company, all the things that Elon Musk is doing. And I think that's the second part of the story, that we know if you look at the last 100 years, the stocks that changed the world were really led by a founder that did see the world differently. So I think Tesla, as long as Elon Musk is involved, is one of the most important companies. So I think it's going to do very well. It's also one of the granny shots in our ETF.
Okay, well, I think that's a very good explanation about Tesla. I'm sure you have a lot of questions after we go through the list of questionnaires. So let's talk a little bit about the U.S. government debt and the physical deficit. I think the market has become much more concerned about the U.S. government debt servicing capability. And I think whether we look at government debt as a percentage of GDP or fiscal deficit as a percentage of GDP, it looks, pretty stretched. Do you think Trump can manage the current, fiscal issues? I know he's got Bassett to help him, and he's a very experienced macro hedge fund manager. So how we should understand the physical situation and any potential risk here?
When you read the newspaper or you hear financial commentators, a lot of people tell you the U.S. is in trouble because of the deficit, and the U.S. has unsustainable debt. And that's true because we know the path for the U.S. debt is unsustainable. But here's the thing. When I started on Wall Street in the 90s, that's also what I heard on Wall Street. I remember our economists and our bond heads of fixed income saying the U.S. is on an unsustainable path for debt, and that was 35 years ago. So for the next 35 years, you're going to hear the same thing. The U.S. is on an unsustainable path of debt, yet it's probably not going to make a difference. That's my opinion. But I do agree that we're in a very strange world because the U.S. prints money and they print a lot of dollars, and yet the borrowing cost is really low. It's very mysterious to me, but I don't think today's levels represent any sort of break point. And here's a really simple way to think of it. One, dollars is the reason people have used own bonds, right, and use the U.S. economy. And dollars are mostly used for speculation. For every dollar of GDP activity that we have, the dollar is traded in oil, bonds, equities 400 times. So as long as the U.S. is the most liquid economy in the world, we're going to print a lot of dollars and interest rates are going to stay low. And the second is that as much as you hear stories that say the US is losing its importance, so the rest of the world is becoming more dominant, and that's why the US is in trouble. One, again, I've heard that story for 35 years. Everyone's told me the US exceptionalism has been over, and it yet has never ended. If you look at the 25 largest companies in the world, 21 of the 25 largest are in America. So just because US borrowing costs might change, is Germany going to suddenly be the place where the next Mag 7 comes? Like, just because borrowing costs change in the US, will Germany suddenly be the next Silicon Valley? I mean, if you believe that, then you should bet against the US. I'm very skeptical of that. So I think you shouldn't make a portfolio decision thinking stocks are going to fall because someone told you the US can't fund its deficit.
You did mention that you were one of the first on Wall Street to make a call on Bitcoin, but do you agree that Bitcoin, Ethereum, these cryptocurrencies will continue to do very well for the next couple of years?
Yeah, I mean, I think Bitcoin is, if you're buying Bitcoin today, it's still early. I don't think it's too late. So if you have zero exposure to Bitcoin and you feel like you missed it, 95% of investors have zero Bitcoin exposure. So you're still way ahead if you're buying Bitcoin today. If you look at Bitcoin wallets, comparing it to the internet, we're back to 1996 levels. Internet went exponential from 1996. So it's still the earliest days. I think Bitcoin is very useful because in the future, we're not going to be able to trust anything. Because cybersecurity, there's nothing secure anymore. We can sample your voice. I mean, even someone takes our voice, translates into Korean using my voice, you'll never know what's true anymore. So you need to be able to trust a system. The blockchain, the Bitcoin blockchain is the most trusted blockchain. And that's why the United States wants to have 1 million Bitcoin. US companies are buying Bitcoin. Banks will soon carry Bitcoin as collateral. But Ethereum is really important too. Did any of you buy the Circle IPO or own Circle? Circle is a stablecoin, and they just went public 10 days ago at $31. It's now $242.
What is the ticker code?
CRCL.
CLCL.
Circle is a stablecoin. It's the second largest. Stablecoins are being pushed by the United States government. Here's the thing. Circle runs on Ethereum. Stablecoins run on Ethereum. So as stablecoins explode, Ethereum is the backbone for stablecoins. So I think Ethereum is going to make a big comeback as well. So I think those two are useful. And then Solana I like, but it's not nearly as used as Ethereum.
Thank you. I think if we move on to the topic of the nuclear themes, I think that's one of the very interesting themes. Also, I think that local investors here are getting more familiar with. I think there's a lot of investment money spent on building data centers. Do you think this need for electricity, power generation, and supported by the nuclear power plant, that's a very long-term theme?
Definitely for now, nuclear is very efficient. And nuclear has what I consider an arbitrage benefit at the moment because, as you know, prior to 2024, countries were trying to dismantle their nuclear power plants. So, Germany closed all of its nuclear power plants. And I remembered thinking what a mistake that would be because nuclear is quite clean, but it got a bad reputation because of Fukushima and also the ESG movement, environmental, social governance. And as a result, the intellectual property of nuclear power has been lost. You know, people left. It's hard to restart reactors. There's a shortage of talent. So that's like the arbitrage, because whoever's creating nuclear can charge a lot of money because no one knows how to do it anymore. I think that is like makes sense as it's an investment theme. But there's going to be no Elon Musk of nuclear. Just keep that in mind. Like, you know what I mean? And so they won't do as well and re-rate the way Tesla or Palantir have moved. It's going to be popular and people will trade it. The other thing is there is going to be a big incentive for innovation and power for the next 20 years. That's where money's going to be made. Because what if someone develops a technology to cut data centers' heat by 80%? Or someone figures out a way to power chips with 80% less power. That company is going to be the big company, right? But then it's going to make nuclear and solar and oil less valuable.
Right. So let's talk about the granny shot ETF, which I think was launched by your company, Fundstrat. Tell us a little bit about this products, why we should take a closer look at this, how the performance has been. Can you give us some tips? What's the best way to trade this ETF?
Well, the Granny Shots ETF is Fundstrat's research portfolio. If you want to buy our best ideas, in one ETF, you have our 35 best stock ideas. We made this available to the public in November 2024, and in 6 months it raised $1.2 billion, which is the fastest ETF to reach $1 billion for an equity ETF in over 20 years. Now, the reason investors want to have exposure to Granny Shots ETF is that it's our research portfolio, which we made only available to our clients since 2019. So for Fundstrat clients for 6 years, they had access to this stock list. And then we now make it available for everyone to own. This year, Granny Shots is up about 9%. Now, that's only owning US stocks. As you know, Mag 7 is flat, has 0% growth. The triple Qs are up like 4%. So Granny Shots is outperforming the broad market and it's outperforming technology. Morningstar ranks it in the 4th percentile year to date. So it's beating 96% of funds. And in the last 3 months, it is in the 1st percentile. We are beating 99% of funds for the last 3 months. Granny Shots, think of it as owning the 35 companies that really drive earnings growth in the S&P 500. So we're saying you don't need to own 500 stocks. You can own 35 and not own the other 465. And so I don't think it should replace your Palantir or your Tesla. But if you want to have country exposure to the US, this is one way to do it.
So it's the best way to pick the brain of Tom Lee and your team, right? So, and performance has been very solid. Congratulations. So the liquidity-wise is pretty,
Yeah, it trades 1 million shares a day. So it's also one of the most liquid ETFs out there.
Okay, well.
And they have options on Granny Shots. So if you wanted leverage, you can buy call options instead.
Well, we continue to look for excellent performance. Okay, so that covers the 10 questions we have prepared. So I would like to open up the floor for a question from the audience.
지금 그 종목을 선정을 하실 때 직접 선정을 뭐 하시면 가장 중요하게 보시는 이제 투자 지표가 있을 것 같은데 그게 뭔지 좀 궁금하고요. 그리고 밸류에이션은 또 어떻게 하시는지 궁금하고 이제 주가가 많이 떨어지게 되면 손절도 하실 것 같은데 손절 기준이 따로 있으신지 궁금합니다.